Ooh, we're back, ladies and gentlemen. Mm-mm-mm-mm. Yo, Rams, yep. We're a little late today because I was watching the Super Bowl. Wow. Stafford, finally. He's been playing for forever. Lost 40 on the Super Bowl. Oh, no. I actually won for the first time ever on DraftKings. I think I won like $60. I was 15th in the fourth quarter picks. So that was cool, but you know, that was a good game. That was a good game. What's going on? Corey, TMIs. Dan the man, what's going on? Futures look a little green, not too much though. Uh 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 uh. Russia looks a little trigger happy. Um, something I wanted. How was your guys' weekends though? Yeah, close game. Close game. How's crypto doing? I haven't even looked, honestly. I was too into the game. Uh, 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 uh. Good shit, Ram. Futures green. What the fuck? Thought there was. Uh, this was Fear Day. Guess they like the Rams. Yeah, nothing has really developed. Um, so odds are the fear would probably come in the morning or um, if there were to be like a Russian invasion overnight or something, that's where you would get a lot of that fear. But the markets are weird like that. You can have a lot of fear, but if catalysts don't materialize, the markets get over things very quick. So, um, it's one of those things like if the tensions keep rising, which it looks like they are, then we're going to see things kind of freak out. I want to look at the futures because they are thinly traded. I'm sure they are right now too. Yeah, see only 63,000 for volume on S&P futures. 34,000 on Nasdaq, 13,000 on the Dow. So not that much volume actually today. Sometimes you look at this and it's 100,000 plus for futures. Halftime felt like yeah, a little bit, huh? I got that too. Aaron, Aaron Donald really a goat. Yeah. What's his name? Cup too. That's who made me the $60 was Cup. Bitcoin slow walk down. Yeah, I want to look at the chart. I think crypto is kind of a better indicator on what the day is going to look like, honestly, in regular trading. Mm, yeah, it sure looks like that, huh? Slow walk down. Yo, yo, yo. Hey, y'all. Oh, yeah. Spike the like button. Spike the like button. About the emergency meeting. Yeah, that would be in the morning. So, it's at 11:30 a.m. If something comes out from that, we do have Bullard that speaks on CNBC. I believe shortly after that, maybe before that. Um, let's see. See if I can pull it up on here. Um, See, the only thing we have is the 4 p.m. Fed Bullard speech, and that is on Thursday. But I heard on CNBC, he goes on CNBC, I want to say after, but it might be before. So that's when I would expect to get some kind of update on that. No way a team from Ohio really won. We don't win things. Oh, I was so sure I didn't even watch. It was very close. The Bengals were, Cincinnati, they were in the lead like the whole game. Like the whole game. Well, I guess it was kind of 50-50, but I would say most of the game. Well, I'm from Michigan too, so Detroit, yeah. I wouldn't think they would win anything. Please understand that I am in a bad situation thanks to my stupidity. Being an old man that got abused by another YouTube channel, but I believe in you and will be a paid member just as soon as I check. I mean, just don't believe anything anybody says because I don't know Bullard, Jerome Powell. I don't know anybody at the Fed, so I don't know if there's going to be an emergency meeting. It makes raising rates. I don't know if the market's going to come down and collapse. It makes sense. I mean, they should have raised rates a year ago, in my personal opinion. But you know, just don't listen to everybody down to a T. Um, like don't gamble on stuff. I mean, you can buy shares no matter what age you are. You'll do well. You know. I sold my crow. Why did I see something about? I think I got a notification for that. What happened? Oh, wrong one. I actually bought Elon coin. It's kind of funny. What? How's Elon coin doing? I think I bought like 45 bucks worth. I'm like, it's a long-term lottery ticket. I don't even care what happens to it. Beautiful chart. Yeah, lost by 3. Yeah, it was close. Yeah, I'm from Missouri. There you go. There you go. Mm-mm-mm. AMC equals 45 this week. I mean, if fear catalysts kind of go away, it would not surprise me. But um, see, I think at the same time, the Fed, somebody on one of the videos earlier today, I said the Fed has been transparent with us, which they have been. They've said, we are not going to act and do anything too aggressively until we let you guys know. And that's exactly what they did, which, I mean, Fed Jerome Powell kind of rug pulled us in a weird way when he was getting his re-nomination. He said that he might start to taper faster. And that was kind of giving us a heads up. And then what they do 2 weeks later started to taper faster. So It's unlikely that there would be a surprise rate hike, but it makes sense to, considering Bullard's comments and inflation. I mean, inflation's 7.5%. Historically, we have to bring inflation higher than, or bring the federal funds rate higher than inflation to get inflation down. And we are not anywhere close to 7.5% federal funds rate. So, you know, you might hear this thrown around a lot, but it's like when you get the cat out the bag, it's hard to put the cat back in the bag. That's an analogy CNBC has been using a lot about inflation. Once it's out, it's very hard to cool down, because then you get the wage price spiral, and that's a whole mess. But Nasdaq slightly red, 0.04%, S&P slightly green, and the Dow slightly green. I think everybody is just kind of confused, waiting for the next news announcement, next something to come out. And then you had Fed Daily says she advocates for a measured approach as rate hike expectations rise. She must be in stocks. The Federal Reserve should be measured in its path to raise interest rates, San Francisco Fed President Mary Daly said Sunday. History tells us with Fed policy that abrupt and aggressive action can actually have a destabilizing effect on the very growth and price stability we're trying to achieve. Daly supports the Fed raising rates in March and said it's too early to call how many times the central bank will hike rates this year. So a little bit more dovish tone right there. Doesn't look like futures are really grasping it. They really don't care about that too much. But, I mean, you know. Chris, that's probably all of the good news. AMC specific, there's actually a lot of positive things. I mean, stuff has been really good. AMC is going down first before it'll rise back up. Very possible. I mean, there's a lot of talk about the negative beta. Is that back? I mean, I wouldn't go as far as to say that, but there is definitely people that are buying the stock right now. You ever drive on Hall Road? Ugh. I feel like there's a lot of Hall Roads. Joe Cool will win like 4 rings. Oh yeah. He's good. He's good for sure. Young too. I don't remember what they said, but he looks really young. By the way, hopefully I'll still own my shares, and so all losses are actually unrealized. Oh yeah. I mean, nothing's a loss until you sell it. But all the good ways the squeeze can be triggered. I hope it's not war. Exactly. I hate war. Lucid Max Pain is 40 this week. I think there's a chance of reaching 40 this week. I mean, that's like a 80% rally from here, so I wouldn't think so unless there's some kind of catalyst. I don't think they report for like another month, so I wouldn't bet on it, but I mean, Lucid's kind of one of those that are explosive. And I was actually disappointed. There was a Polestar commercial. There was 2 Silverado commercials in the Super Bowl, but no Lucid. I'm like, you got Polestar has a commercial, but not Lucid. Come on. Weekdays up and down, lunch break up, end of the day, yeah. The Fed will wait till Russia invades. Yeah, that's the thing too. I mean, when they do that, oil will go up a lot, and then that'll also hurt inflation. Make that worse. They're waiting for that moment to let the bubble pop and clear the Q1 books of naked shorts. Yeah, well, it's in the next 2 weeks. Possible. I wouldn't count on it, but it is possible. Ooh, Edward. Okay. Just an early thank you for what you do, and hopefully I can recover some of my losses in time. But thanks for that, for helping others. Thank you, brother. Never necessary, but thank you. When someone sells their shares, which shares are sold first? Is it FIFO or I would love to keep my real shares and not let the hedgies have them. I mean, I think a lot of our shares are actually, just, I mean, because how's a good way to put this? Like when we own shares, uh, I mean, there's a lot of claims to AMC shares out there between everybody, institutional, all of that. But people don't sell them as frequently if you're buying and holding the stock. At least that's something that I can notice, right? Just not being a broker or market maker, you can tell that. So they only have to give you real shares, when you go to sell, but it's really hard to tell, honestly. Last in, first out. We're not feeling Evergrande yet or full effects of Facebook. Yeah, Facebook is destroyed. Facebook actually had a commercial in the Super Bowl too for the metaverse. But yeah, I mean Evergrande, like I said that pretty much from the start, that Evergrande's something that will come up later in 2022, certainly. That story is not over, but it takes a while for a big company like that to really start um, going under. Like it doesn't happen overnight. It's not like a small company. There's a lot that has to get figured out in there. But yeah, Facebook could be down and out for a while. There won't be war. Russia will annex eastern Ukraine and western Ukraine will return to Poland. Interesting. I mean, I don't think there's going to be like a world war. I mean, nobody wants that, but why did chart look like a snake? Damn hedge funds. Great content, by the way. Well, thank you. Yeah, it's I mean, this is the most green we've seen in a long time, so but you are right. It does kind of look a little interesting there. So as market tanks, short squeeze start. Uh, not as the market tanks. Like the short squeeze won't start for no reason. And I want to be very clear about this. There has to be a catalyst when the markets are down, which if you've been investing since 2020, that was the fastest stock market crash and rebound in history. This is not going to be a fast crash down and then straight back up. It's probably going to be a meltdown. You'll probably see a big gap down, maybe to 400 on this. I'll visually, maybe down to like 400 or even back to 420, calm down for a second. Maybe you'll go back up to 430 and then down to 400. It's going to be a longer process than what we seen back in March, which was only like 23 days from the top to the bottom and then started to go back. So it's not going to be a fast crash. So like that, what's going to happen is when the markets are down and liquidity is restricted, because like the video I went over, I believe on yesterday, was showing that hedge funds portfolios are concentrated in a lot of large cap stocks, believe that or not, right? So they got a lot of large cap stocks. They have a lot of pressure to at least return something along the same lines as the S&P. If the S&P is up 20% on a year and a hedge fund returned 5%, people question why are they invested in that hedge fund. So these hedge funds, they have to own the Apple, Microsofts, even Tesla now because it's a part of the S&P, Google's, Amazon's, at least somewhat own those companies. And then they can venture out and do other things to try to help bolster their returns, right? So that's the basis of this. But the hedge funds, they're not hedging out Apple's, Microsoft's, Tesla's. They're not hedging those stocks. They're not shorting those stocks, right? So they're basically leaving their portfolios just free and clear for any downturn in the markets. They are shorting stocks that are already shorted and down 60, 70, 80% like AMC. They're shorting those stocks. Even SoFi and Lucid have over 20% short interest, which they're great long-term businesses, right? So they're not protecting themselves. So some hedge funds, yeah, they might do okay. If the market crashes, they might hedge out. Some of them obviously are hedging out the right way, but a majority of them are not. So when the markets do go down, they're going to lose a lot of money because these stocks that are like AMC, SoFi, Lucid, they don't have that much more to fall. I mean, I don't think Lucid's going to go from 24 to 12. I don't think AMC is going to go from, 19 to 8 or 9 or 7. I don't think that's going to happen. So, they're really leaving themselves exposed, but once the markets go down, hedge funds lose money. That's that period of time where you need to see some kind of positive catalyst to start the short squeeze. Like with Volkswagen in 2008, the stock market was at the bottom, but there was a catalyst that caused that. Volkswagen would have never happened if there was not a catalyst to cause it to happen. So yes and no, because you need to see the markets go down, but AMC would also go down at the same time until you got a catalyst, which when liquidity is thin and dry, I mean, small catalyst could pop the stock up, could send shorts covering, obviously the smaller hedge funds to the larger guys. Because, I mean, no hedge fund covers on a short position unless they have to, and they're margin called to. Especially not with AMC, the only stock in history they refuse to cover no matter what happens. It probably breaks financial. Yeah, China's financial system is not doing so good. I mean, they are raising rates. What? Or cutting rates. Like, what is going on? Does anyone know of Max Payne this week? We can go ahead and check. I believe it's 19. Yeah, $19 for AMC. Thoughts on SoFi tomorrow? I have a few $13 calls expiring next week. I have a $12.50 call expiring by March 18th. So I hope SoFi goes up. And I think the Super Bowl is probably going to drive a lot of attention to SuperBuy or to SoFi. But it's not really a question if it did. It has been. So if you look up SoFi on Google Trends, I mean, SoFi is at 100, the highest it's ever been at. So I would imagine that translates into a bullish stock price, but really depends what the markets do. A lot of money disappeared and went somewhere on this Facebook drop. Yeah. I mean, there is some cash out there too, but I think a lot of retail investors actually did good playing the put side because, like we did in the trading community. I mean, we had Facebook puts, so some people did very well on that. But, yeah, a big hit to the market cap though. Facebook was the single biggest drop in history of market cap. Crazy. AMC fell to $20. They're filled a $20 gap. Think downside we need to hold 1850. 18 or we'll break to 15s. Hope I'm wrong. Yeah, 1850 was a key level that I was watching for. And I went over this on the video, but I really wanted to see a close above this 20-day moving average as well. And that was $16.91. So we cleanly stayed above that. But also the 1850 mark, which we did as well. So closed at 1881, up 3 cents in after hours. So 1884, about 34 cents above 1850. So that looks really good. As long as there isn't a lot of weakness in the markets, as long as the markets don't start to tank, then I think it should be pretty good. I want to see what the volume is on the futures now. Yeah, 66,000 for volume. It's not terribly high, but futures are doing good. Russell 2000 futures are up 0.5%. There we go. You might start to see that secular rotation. Got a strangle on SPY for next week. Oh yeah, it's gonna get volatile. That should do good. How far out is good for AMC in the money calls? How far out is good for in the money calls? I mean, I guess it depends what your expiration is, but I mean, if I were to do in the money calls, maybe like $10, then your break even's 1865, so you're already positive on these. If you bought the $10 calls for 865, you're already positive on that. So that's probably what I would do if you were going in the money, but that's only February 18th. I like to get more time because you just never know. Uh, what's up, y'all? All the way from Maine. Who's ready to get paid? Oh, shit. From Maine. Yeah, you are way up there, huh? I'm sure ready. Beginning to want back out. Oh, no. Don't say that. Not talking about transparency rule. Why? I mean, I'm unfamiliar of a transparency rule that has been approved. Has one been approved today that I didn't see? 4 days ago. Yeah, nothing's been approved, and we've covered all this transparency rule stuff. I think it's gonna be a good thing. It's not going to be the reason why AMC squeezes, but it's still, I mean, a positive thing. But it's not going to be the catalyst. It's not going to be a, like that. But wouldn't that be cool to see though? Would that be cool to see what positions they have? They see me rolling. They hating. Patrolling, Maine, trying to catch me riding dirty. Rams, baby, let's go. Oh, yeah. Matthew Stafford. Matthew Stafford with a typical 1 minute left game winner. That was the Lions for years. The one getting in effect on March 3rd. Let's see. Where could I find it? Because I can't, I don't see it for March 3rd. Yeah, no, I'm not seeing anything March 3rd. Nothing. Nada for March 3rd. Futures looking a little green. There was like no news that came out today. I feel like hardly any. Yeah, futures are thinly traded right now too. I overextended myself. Big mistake. Need the money but don't want to sell. Went down. What do you mean you overextended yourself? Oh, like, okay. What, buying stock or AMC will never squeeze until 2025? I don't think that's the case. I mean, I think we've seen a lot of bullishness already. I mean, I think it's hard to deny that AMC's had one of its best weeks since I mean, maybe right here, maybe mid-December, but I think this week was a little stronger. Definitely the sentiment is a lot stronger right now. It looks like we're in a technical breakout too. I mean, we closed above the 20, far above, closed above 1850. Like, I mean, I think that looks really good. MACD, really bullish. Volume looks good. I don't really have anything negative to say about the charts besides the obvious. I mean, we're still down far from 40s, but you got a call from Vanguard. Yo, Big Blue CNC in the building. Oh, vlog. The quiet before the storm, the bloody storm. Oh yeah, the perfect storm too. Tuning in from Denmark. Love to see her hat in our national colors. Denmark International. Okay. I like that. Mm-mm-mm-mm. Bought stock with money I didn't have, used money I shouldn't have. I'm 95% in AMC, hence overextended. Oh, yeah, yeah. I got you. What's your average, though? Yeah, the technicals are taking twice as long as any other stock, and the market will be weak again end of the month until May. Probably. It all comes down to the Fed. Like in inflation, CPI doesn't even have an effect on the markets compared to the Fed. Like CPI could come in at 10% and the markets don't like it, but they're not going to sell it off on that. But Fed Bullard comes out and says we probably should do an intermediate rate hike. We should have done this a long time ago. Um, he wants to see 1% rates by July. He says that the markets tank. Markets hate it. They freak out. But CPI, none of that. Because the next biggest catalyst is going to be obviously the FOMC minutes and PPI. FOMC minutes are, what is that, Wednesday? And then PPI, Wednesday at 7 p.m. And then PPI is 1:30 on Tuesday. And those are going to be the big things that could move the markets this week. In March, CPI March 10th, and then the Fed March 16th. AMC to Pluto's moon. Rams win, baby, just like apes. Oh, yeah. Oh, yeah. That was a close one. Stafford for the win. Finally, I mean, I feel like he deserves a ring. Checking in from Louisiana. There we go. Hit 40s, dropped away down to 2160. Well, there you go. At least you're pretty close. And I mean, you were almost break even. Like 2 trading days ago? I believe we touched, 21. Almost touched 21. Dr. Dre's the first rapper to have a football game before his concert, and after his concert, F the Rams. Isn't he trying to buy a football team, I believe? I believe he's trying to buy a football team with somebody else, I think. I heard that like a month or two ago. Are we going to find out tomorrow if there's an emergency rate hike? More than likely, yeah. If we do, I mean, you're going to be in for a world of pain. If we don't, then the markets might start to shrug it off. But I don't think it's fully priced in by the markets. Like, people have been talking about this, but it's more so rumors on YouTube. I think CNBC maybe talked about it like once, but it's not a huge headline. So there was news articles and all of that. Like, it's not just retail that is speculating this. Fed Bullard said it himself. They should come out and do an emergency rate hike, and then they schedule that unscheduled, well, it's now scheduled, was unscheduled Fed meeting 11:30 a.m. tomorrow. So there's good reason to have these kind of rumors, and I don't think the markets are fully pricing it in like it's likely to happen, which it's not likely to happen, but there is a chance it could happen. It makes sense to come out and do that. But if it were to happen, probably, yeah. There's a lot of Fed speakers this week, too. But I think the markets are mostly reacting to the Russia-Ukraine stuff. I think it's really maybe like 5% a possible emergency rate hike, like 95% what the Fed has said, the upcoming data that we're getting, and mostly the Ukraine situation. So, if that were to happen and the Fed did come out and emergency style raise rates, that would freak out the markets a lot because it's really not priced in. Bum goals. It kept cost averaging down my AMC and added as able. Hopefully I am making proper choices. I mean, there's really no way to know in the end, just because we don't know what's going to happen. But I haven't sold anything. I continue to add. I wouldn't worry about it too much unless it's like your whole life savings. I mean, I wouldn't personally do that. But you can always buy other stocks too. Whatever fits your situation more, really, when it comes down to it. But the last thing I would want people to do is worry about it. Futures are looking good. Jeez, 0.27% on the Nasdaq. What is the Russell at? Russell 2000 up 0.5%. Look at that. Outpacing everything by double. That looks good. Futures are really thinly traded though right now. Not that many contracts that have changed hands. I can't handle the suspense. Thanks, Tyler. Yeah, there we go. Yeah, me either, though. I mean, the suspense of the Fed is real. Hoping at a 2% rate hike, that would definitely start the mouse. Oh, a 2% would crush. I mean, I don't even want to think about what that would do. I mean, we would. I don't even want to think about it. That would be crazy. Started staying up late lately to watch these. Keep me calm and understand. Things get better. Keep doing the good work. Thank you, brother. Thank you. Some say the squeeze has started. Would you agree? Probably not. I mean, we haven't seen the shorts cover, and what is different now compared to 6 months ago? Shorts are not forced to cover. The only thing that forces shorts to cover is liquidity drying up, and sure, the markets have priced in, like, the 2-year treasury bond is, or 10-year, 2-year, all of that is trading higher, so capital is a little bit more scarce, but it's still way too much. There's still way too much money out there. So no. Long story short, no. There's nothing that would force the shorts to cover right now. But, I mean, I could be wrong. The stock could go up 100% tomorrow, and then I might have a different answer. But I don't see shorts covering. I see nothing is really materially different 6 months ago than it is today, besides the fundamental business has gotten better. But shorts, they don't want to cover then. They don't want to cover now. The only way they will cover is when they are forced to cover. But good thing is, they will be forced to cover because the markets are not going to revert straight back to the upside. The Fed is the only reason why the markets have gone up in recent history, right? When there's a bad situation, when there's high inflation, when there's an economic disaster like COVID, the Fed marks the bottom. So every time the Fed starts to accommodate the markets, that's when the markets start to reverse and move to the upside. Think back to 1987. I'm sure none of you guys were trading then. If you were, congrats. 1987, Black Monday, Black Tuesday, whatever. I think Black Monday. Stock market dropped 22%. The markets only reversed when the Fed said that we will step in and provide unlimited liquidity to whoever we need it to back up the market makers. Basically, the market makers in that time and still today were the buyer of last resort, and they had bought so much they didn't have any more money to keep buying. So the Fed stepped in, markets started to rebound. So, COVID, the dot-com era, 2008, every time the Fed starts accommodating more, the markets start to reverse. And the Fed, inflation's too high. They can't. They physically can't. So you're not going to see a rebound anytime soon. And I know that's very unfortunate. If you're invested in other stocks like I am, then I would think about the long-term game here. But I'm assuming a lot of you guys are in AMC, so you're probably happy with that statement. But 15 per share currently. Oh yeah, you're in the green then. There you go. Is their meeting at 11:30 a.m. or is there going to be an announcement at 11:30? Their meeting is at 11:30. Why did that say? I'm like, why does that say 43 minutes ago? I don't think anything has changed here. Yeah, it doesn't look like anything has changed. I don't know why it said 43 minutes ago, but how do you know when they price things in? You can kind of tell, really. It's not like something that you just go look at, but it's more so what are people expecting? Like when everybody expects the Fed to raise rates, it gets priced into the market. So when the markets hear about it, they're not freaked out. But you kind of know, unless you don't watch CNBC, you don't listen to other people, you don't watch the Fed, then you wouldn't know when things are priced in. I mean, you wouldn't be up to date with that kind of information. But if, like, right now, you can also go to Fed Rate Monitor tool. And this will tell you exactly what the market is pricing in. What did that say? Oh. About 50.8% of people expect a 0.25% rate hike in March. 49.2% of people expect a 0.5% rate hike in March. So expectations move around often, but yeah. Like, you kind of know, and there hasn't been enough talk or fear about the Fed raising rates on Monday, so I would say it's not priced in. Like, you almost have to imagine, if the Fed came out tomorrow morning and raised rates, does the market expect that? No. The markets expect the raising of rates to start March 16th. So that's not going to come as a huge surprise unless it comes in a 0.5% or higher, which is kind of priced in, but it would still be a little bit of a surprise. If they raise rates tomorrow, I mean, virtually nobody would have that priced in. Let's actually take a look. It doesn't have it earlier than that. Yeah, so there's not even an expectation of the Fed raising rates. But some people do kind of expect it in a weird way, but not enough to price it in. So you're saying AMC will be 40 again this year? Oh, I definitely think so. I mean, this is the year for AMC. I mean, there's a lot that is working in our favor. So small caps, they've been shorted into the ground under their fundamental valuation. So I think you're going to see a secular rotation into a lot of shorted stocks because they have been shorted so much and they are so cheap and fairly valued. At the same time is COVID's going to be, gone this year, God willing, hopefully. And then you're also going to see money flowing into recovery stocks because you're going to get people going to offices, people going out to do things, people just returning back to work, flying on planes, going on cruises, going to movie theaters more. So you're going to see money flow into those stocks for that reason, which AMC falls perfectly in the recovery trade. And on top of that, there's a lot of great movies that are coming out this year. Like, there is actually a reason to go to the movies this year. 40, then it's going down to 10 because the myth about large hedge funds going broke. There's no hedge funds. Well, I think you're right and wrong because the myth about hedge funds going bust is not a myth because I've provided like the evidence here, right? So I don't know when the markets will fall or how aggressively they will, but I do know they will. So there's no question about that. The markets will fall substantially. Like, Meet Kevin is 100% right. The markets are going to crash. No other way around that. 100%. Inflation is high. The only way the Fed can accommodate the markets is by printing more money, quantitative easing, and cutting rates. Rates are already at zero, so they can't cut rates, right? Inflation is high. If economic growth slows down, the first thing the Fed does is cut rates and start printing money. They can't do that now. Inflation's too high. So if the economy slows down, we will go into a paper recession. That's going to happen. But the Fed won't be able to step back in and help out the market. So what I've went over in the video on Saturday, I highly recommend you watch it because you obviously didn't. Apple, right? The largest component of the S&P, the NASDAQ, just has the biggest weighting in the markets. If you watch the S&P and you watch Apple side by side, their charts do the exact same thing, right? So you take a look at the short interest on Apple. It's not even 1%. It's 0.45%. Microsoft. It's 0.35%. 36%, 0.36%. So they're not shorting the stocks that would protect their portfolio because shorting is hedging. It's insurance, right? Buying puts is insurance on your position. If you have AMC at $40, your average price, if you had bought a put at for whatever, 36 and your break even was 45 and your break even was 40, you wouldn't lose any money if you bought one put for every 100 shares you owned of AMC, for an example. They're not doing that. So once the markets fall, they're going to get dramatically hurt. They're going to take a massive beating. There's no arguing that. I mean, the evidence is right here. They are shorting stocks that are already shorted and down 50, 60, 70, 80%. So the odds are here that those stocks are already priced for the worst case scenario. They're already down as much as they will go because let me revert back to the AMC chart. What do you notice about this? Even though all the shorting is going on, there was a floor, a price floor, a bottom at $15 per share. Yeah, sure, we went under to $13.40, but let me also pull up the SPY in the same time. Look what happened to the SPY. So I hope it's making sense by now, and I hope you see how it's not a myth that this is going to happen. It's a fact it's going to happen. There's no other way to go about that. That's a fact. Yeah, sure, hedge funds open all the time. That's correct. But, I mean, there's no myth here. I think the evidence is pretty clear. And that's not attacking you personally. I've got that comment quite often, and it's not true, Like, the evidence, the proof is here. It's in plain sight. People just don't notice. Wall Street, because obviously, who wants to short Apple or Microsoft? Nobody. But you have to if you're a hedge fund and you're protecting your portfolio when it is weighed against the S&P 500. If you're shorting stocks that are already beaten into the ground, fine, cool. They might fall a little bit, But the index could fall 35, 45, 50%, which, I mean, if these scenarios play out like this, if the Fed has to tighten while inflation is still going up and the economy is slowing down, it's very well possible that Apple's revenue could go down 30% next year or 2023. What's that going to do for the stock? It's going to go down 45%, more than likely, because it's not a one-to-one correlation. People will freak out, fear will take over, stocks will fall dramatically more than the revenue has fallen. So, I mean, I think it's pretty simple. That AMC is already down in the ground. Like, the last thing I would do is short a stock that's into the ground where my portfolio is not weighted towards that sector. A majority of hedge funds portfolios are not in the stocks they are shorting. They're correlated with the indexes, or at least they should be. I mean, unless you're like Kathy Woods and you're just balls to the wall in innovation, which that's great. I highly advise you do that if you have, and it's not financial advice, but if you have 5 or 10 years to be down on your portfolio and then watch it balloon 500% in a year, by all means do that. But that's what, I mean, you're looking at. And I mean, that's not what hedge funds do. They're supposed to hedge out their portfolios to protect themselves. And they're not doing that. Simplest way to put it. Kind of crazy because I honestly did not expect to see Apple, Microsoft, the largest weightings of the S&P and the NASDAQ, having such a low short interest. I did not expect that. And it kind of took me off guard because you figure hedge funds are a little bit smarter than that. Like, we always joke that they're dumb, but not all hedge funds are fucking retarded, right? I think collectively, Apes Retail is a lot smarter than them in the ways that we conduct ourselves. You know, obviously, I mean, we've done very well for ourselves over the past year. We've outperformed hedge funds by far. But in the grand scope of things, I didn't think they were that stupid to leave their whole portfolios open and short stocks that are down 70%. That's beyond me. But the facts are there. The proof is there. Hopefully, that was an eye-opener. Definitely a bit of a rant, but this is a stupid question, but does the market ever price in a potential crash? No, not unless there is something that comes up. Like if you ever hear me say a black swan event, a black swan is something that is not priced in at all. Like Facebook, that was not priced in. That was a black swan event to a T. It wasn't priced in. Nobody expected Facebook to say the metaverse would take 10 years to return a profit, that they've lost $10 billion in the last year on the metaverse, that they were guiding for substantially lower revenue than their lowest analyst expectation. Nobody expected that. So that was a black swan event. And then all of that pricing in gets done immediately, like right away. So if like Russia declared war on us right now, just out of the blue, not priced in, the markets would have a fear attack, a panic attack, and the markets would probably drop 10% in a single day. So, you know, it in that sense, no, but no. Like even with COVID, like COVID was widely known, but the markets didn't even price in the fact that we could go into a global we went into a recession, very short-lived, but we could lock down everything, shut down businesses. The markets didn't even expect that, which that has actually happened in history before. So, you know, the markets, they're not that smart when it comes to that. They price in the obvious things. They don't price in, like the Fed possibly raising rates. They don't do that because ultimately pricing in is like hedging out the other side of your positions, right? So like on Friday, volatility was priced very low. The UVXY or SPY puts, we traded all of that on Friday in the trading community. And all of those trades were over 100% winners because volatility was priced very low. Nobody expected the Russia escalation and Fed bullard. So they don't really price in a crash before there is a reason to price in the crash. Are we getting Moderna puts? That could be an interesting one. Matthew Perry, makes no sense to short a stock when it sits this low, but they keep doing it. Honestly, 100%. Does not make any sense. I mean, like, why would you short this? Just why? I mean, what are you looking to get? Are you looking to drive it back down to 10, 12? Like that doesn't even make sense. Especially it was just at $13. I'm right there. Just no sense. Like if that was my capital, no way. No way. And shorting has picked up a lot too. I oh, what does the Molly Fool say? Oh geez. Uh 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 uh. Now what? The movie theater industry is not about to drop dead anytime soon and likely has many, many years ahead of it. That doesn't mean theater stocks are good investments, at least the elevated levels AMC Entertainment is trading. Dude, it's not even elevated. I hate the Molly Fool. Oh, terrible. Just terrible. Uh 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 uh. Where is this article? Fucking Bloomberg. That's the picture I want. Mm-mm-mm-mm-mm. Did they delete the article? I'm confused. This. Jeez. There we go. Yeah, so this is shorts covering on the top, and this is short selling. Highest levels in 10 years. Crazy. Any plays on oil this week? Oh, 100%. I'm I I did more looking into it, and it it wouldn't make sense to not have a small hedge against oil or against my portfolio using oil, because I mean oil, if Russia invades, probably will go to 115 to 125 a barrel, probably pretty fast. You're probably going to see a straight line up as far as oil prices are concerned. Okay, I don't have the oil chart pulled up. I might use USO or WTI. I'm not exactly sure on that, but I mean, we still could go up dramatically, and you'd probably see a huge candle. I mean, it could get really crazy because Russia is the top. Hold on. Like Russia is the top, the second highest oil production country, and if they start sanctioning their oil and not letting exports out, I mean that could be huge. Russia exports more oil than Saudi Arabia. I was like, geez. Edward Durbin. Okay, okay. Just going by action in four markets. Presently looks like it'll be a very, very red day here. Oh, yeah. Yeah. I got notifications on that actually during the game. Yeah, it's pretty bad. 1.28%, 0.63%, and 2% for Japan's markets. That's wild. Especially, I mean, our futures being green, kind of weird, honestly. But Japan's markets are pretty sideways anyways. They still have never recovered from the 80s. Darn, CEO has been selling all of his shares. Really? Is it not going to pull up? Okay. Yeah, he has been selling, huh? Oh, that's nothing but sells. Jeez. Have they ever bought? Jeez, they bought once, I think, right here. Paul Sagan, director, bought 52.63 thousand shares. Everybody else has been selling. CEO sold 9K. Let's go ahead and see. Is there a better way? Yeah, no buys. 2.13 billion of sells, 697 transactions. Was there Moderna news actually? How much Moderna stocks owns? It is insider sales. Usually it's not a good sign. That's for sure. I mean, and that could actually be a bet for COVID numbers to go down too at the same time. I kind of like that. That while your vid's down, be synced up. If it drops below 10, I'm scooping up so many more shares to scoop up another 200 plus shares. Oh yeah, $10. Oh man. Oh man. USO. Yeah, that's probably what I would do, but there's other ones too. There's like the Brent crude, WTI, things like that. I think there's an inverse oil fund too, like a leveraged inverse oil fund, but I don't remember the ticker off the top of my head. DCA on AMC. Mine's 35 to 37. So it's the biggest loss in my portfolio. Most certainly. TCI always doing his homework. Appreciate all your work, man. Well, I appreciate you. It's always a great time. It's always a great time. I will bet $1 that Putin doesn't invade Ukraine. It would be a very damaging move. Yeah, I mean, that's right. Uh, it it doesn't make sense, honestly, because even 2 3 months ago, Russia was saying that. I mean, Ukraine was like their brothers. They're the same people essentially, and uh, this kind of came out of nowhere. I think he kind of wants to send a message more than anything. Like, um, like Russia and Ukraine. Like I think that's more of sending a message. Like China and Taiwan, like they want Taiwan. They want to take it for obvious industrial reasons. I mean, Taiwan semiconductors. Like, I don't think there's any logical reason they want Ukraine besides sending a message and keeping Ukraine out of NATO. That's probably their main goal is to accept a treaty or ceasefire, whatever, and basically only to keep Ukraine out of NATO. That's what I would imagine. I'm surprised to see a 3 to 5% drop across the boards here Monday. Yeah, I wouldn't either. I mean, futures are kind of not a huge sign of what is to come unless they're down huge. I'm fully positioned for both sides. I mean, I got some calls, got some puts, so it could be good. Unless there's a war on the horizon or threat of be the extra for those wild years we've held. They do the vaccine. Oh yeah. Groceries about to get real scarce. Agriculture sector looking rough. Fertilizer hard to get, and farms gonna take a hurting. Yeah, I wouldn't be surprised on that. I mean, with all these blockades too, that's definitely gonna have some impact on things. Is the stream up all the way to pre-market? No, it's only from like 10 to 11, so I'll probably get off here pretty shortly kind of just to go over, what has happened over the weekend, what's about to happen, look at the futures. Really, this week is all economic data, Fed speakers, potential rate hike tomorrow. Uh, if not a rate hike, I'm sure we get something from that Fed meeting. I mean, the Fed meeting is to decide essentially to raise rates or not. Matters to be considered. Just this one. Review and determined by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve Bank. So, the rates. And we should get something, I would imagine. It's a closed-door meeting, so we won't get the full transcript. But it's at 11:30 a.m., Monday, February 14th. Wouldn't that be a good Valentine's Day gift? Oh. Down the pass, Syria, Eurofighters were flying daily. Yeah, there has been a couple scuffles kind of in eastern Ukraine, but nothing crazy. I mean, Ukraine's been in a civil war for, I believe, since 2014 anyways. So there's been fighting in Ukraine for a while. MSN pushing it, big smoke screen. Well, yeah, I wouldn't be surprised there. Chernobyl killed Ukraine and Russia. Yeah, Chernobyl's crazy. Like, I find it crazy. Like, this is not about stocks or anything, but like nukes, when they go off, the area is only radioactive for like a week, where like a nuclear reactor melts down and it can be radioactive for like 100 years. I think that's kind of crazy. But yeah, that definitely had a huge impact to things. Tyler, in your opinion, am I doing okay to keep holding and adding to my AMC, SoFi, and Sens shares? I mean, really depends what your portfolio looks like. If that's all you own, I've dabbled with Sens before, and I believe aren't they the diabetic monitor that'll like give you insulin when you need it? I believe. If that's the same company I'm thinking of, if that's the same company, yeah, it's a tough one because there's so many glucose monitoring just diabetic companies anyways, so it's going to be really hard in that aspect. A small position could go a long way, right? Like, I owned Microvision at 28 cents, and that thing went up to $28. So a small amount can do a lot for you, but I wouldn't have a heavy concentration in Sens. AMC and SoFi, AMC at these prices, it's like you're buying it for almost pretty much its fundamental valuation, so I don't think that's too risky right now. And SoFi is an easy couple X in the next couple years, in my opinion. I mean, not financial advice, but SoFi is definitely the safest. That's a tough one. AMC, SoFi spends a lot of money. AMC's like free cash flow positive, but SoFi has more growth, which AMC should have growth, good growth, like with their popcorn business, other things, crypto, whatever the other things they're doing, but it's not guaranteed. It's a tough one, but I think you're pretty good buying at these prices. I'm not a huge fan of Sens though. Like I said, I think there's a lot of competition, and it's not a guaranteed win, even if it takes a year, 2, 3 years. Those are the companies that I like to buy. Like, I figure buying AMC at these prices, it's pretty much a guaranteed win in the next couple of years, no matter what happens from here until now. Like, the business is 30% more efficient now than it ever was. So if they made $110 million in profits in 2018, if they were 30% more efficient, they might have done, $300 million of profits. So all different companies right there, but I think AMC SoFi at these prices make a lot of sense. But yeah, Sens could be good. I mean, it's just one of those things. It's such a diluted field to be in. Like there's so many different things, but it could be good. I mean, it's been a while since I looked into it deeper, and I did see they got um, the final approval for it, but small positions could do a lot of work for you. That's what I'll say. Even 100 shares could do a lot if it does go up a lot. Guys, get your tickets for the Batman by tomorrow to stag the NFT. Ooh, thank you for reminding me on that. Russia has a lot of the world's natural resources. When you look the size of why bother invading Ukraine, it's relatively small landmass. Yeah, I was actually looking at it too. Oh man, Russia has been destroyed by sanctions. Like they can't afford any more sanctions. Take a look at this. Uh 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 uh. uh. Like look at this. I was kind of blown away by this. This is kind of hard to see this probably if you're but look, this is $1. $1 equals 77.95 Russian rubles. Before 2008, before they started to see a lot of sanctions, even back in history before, $1 would get you like 25 to 23 Russian rubles. Now it gets you 78. So the value of the Russian ruble has went down dramatically. Like their country is not doing so great because of sanctions. Like Russia is not. I believe Germany, other countries have much larger GDPs. So it's like if you're talking about these sanctions alone could take down Russia's GDP by 4 or 5%, like they've said, they can't economically take that hit. Like, where is Russia? Did I miss it? Yeah, 11th. So Canada has a higher GDP than Russia. And it's all because of sanctions. Russia would probably be the third largest economy in the world if they never got sanctioned. So, in that aspect as well, I don't think it's going to happen. Like, I wouldn't solely bag on it. Like, Japan as the third largest economy, and their economy hasn't grown in like 30 years. Germany, number 4. Fifth, India. Sixth, the UK. Seventh, France. 8 is Brazil. Come on. Brazil's got a larger economy than Russia. Italy, 9, 10, Canada, and then 11th is Russia. South Korea is almost bigger than them. They can't afford more sanctions. They simply can't. Puts on Putin. Oh man. Oh man. Yeah, if they were to invade, oh certainly. Edward Durbin said keeping it 100. There we go. There we go. Appreciate you. Hey, you think it'll hit 900? Yeah. When if shorts are forced to cover, yes. If we just see a rally because the fucking market feels like it one day, no. I mean, no. The shorts have to be forced to cover and buy at these high prices. Shorts don't cover because the stock goes up. They don't give a fuck about the stock going up. They'll wait for it to come down. Who would cover if you just realized a massive loss? Tell me that. Would you cover if you had $1 billion, you just lost 100 million because the stock went to 2,000? No, you're not gonna lock in that loss. You're gonna wait for the stock to go back down to 100, and then you're gonna lock in a smaller loss. The only way it happens is if they are margin called, and they have to cover. That's it. They would invade Ukraine and the world will watch. I mean, that's true. Nobody's going to step in there to like be the guy of reason and throw their troops in that. That's for sure. Europe depends on Russia energy production. That is true. That's why I would like to hedge out my portfolio, even with $100 or $200, betting on oil going up. Because if they do invade, stock market will go down, oil will go up dramatically. And you're exactly right. Like 40% of all Europe's oil comes from Russia. So it would be a huge hit. And that's what happened. I mean, that's based off of a statement. Made oil close up almost 3%, but it was up as high as like 6-7% at one point intraday. This is USO. This is the United States Oil Fund. This is straight up. I got VIX calls riding through Friday up $100. Yeah. I bought 2. I think they're up like 100 a piece too. When you're in the choke hood, there's nothing to do but try and break out. Yeah. Please remember that that in history, and I'm 64. Every time our economy goes to crap, we get into a war. Yeah, I agree there. Markets take a move down too. Every time there is a conflict like that, if Americans aren't boots on the ground in a conflict, they tend to be very short-lived. Like Desert Storm was, a shorter-lived conflict, and the stock market didn't go down for too long. Other things like, we kill the guy in Iraq and all that, and it's very short-lived unless there's boots on the ground. So I think that's always good to keep in mind. Gas prices here could actually head towards $10 a gallon. Yeah, that's what I was saying to people too. I'm like, I mean, remember in 2008, I was younger. I obviously wasn't driving then. And I remember in Michigan, they got to over $5 a gallon and like nobody was driving. And that, I mean, losing a third of the oil supply in the world would probably drive prices up higher than 2008. And people were freaking out then. So I can only imagine. I can only imagine if oil can't be exported out of Russia. Jeez, I don't even want to think about that. I'm buying a Tesla that first fucking week. Or I'm buying a Lucid. I'll support my investments. I've been making $212,000 a week since I started investing 3 months ago. Thanks for the content. What? I see calls through Friday. Yeah, and then going calls on individual oil producers like Oxy. I actually made a decent amount of money on them during the crash. I think I bought them at like $6 or $7 in the crash of 2020. Making trades on those XOM, Oxy, BP. That might actually be good too. Come to think about it, that might give you more bang for your buck, but I don't think you'd go wrong either way, honestly. I would bet my entire portfolio that there's going to be a war, in my opinion. Ooh, yeah, it's a pretty divided thing. It's kind of 50-50. Some people think so, some people don't, but the way they're talking makes it seem like they know, like Putin has made up his mind already. It's 11:28 p.m. for me. Yeah, I'm going to wrap it up here. Thank you guys for tuning in. Always a good time. Thank you, Edward Durbin, for the super chats. Appreciate all you guys. Thank you for holding it down and coming and joining us. Thank you to the mods, Vlog, IG Nico, all of you guys. Appreciate you guys for being here. And yeah, if you guys want access to all of my trades, link down below in the description or in the pinned comment of the last video. Get yourself some free stock with Mumu, Weeble, and Public. Worst case scenario, you get some free money. never a bad thing. So check that out if you guys do want to. Thank you for tuning in and have a great night.